Paying your income tax. When working with income tax, it's important to know your vocabulary. Income is the amount of money you earn. A deduction is the amount on which you do not need to pay taxes. Typically, our standard deduction is around $12,200, but it changes every year. Your taxable income is the difference between those. Your income minus what you don't pay gives you the amount on which you do pay taxes. And then your tax is the amount that you send to the government. So let's say John earns a salary of $55,670. He takes the standard deduction of $12,200 and is at a tax rate of 22%. How much income tax does John owe? So here is John's money. Let's just say this pot right here would represent all of his money, $55,670. Some of it is going to go to the government and some of it is going to go to his bank so that he has it when he's ready to spend it. So what they're saying here is he can take a deduction of $12,200, so about a fifth of it. So let's just say this much he does not have to pay tax on. So what's left here? We know this amount would be $55,670 minus your $12,200. So we know he's going to pay tax on $43,470. So we know that is what's called his taxable income. All right, so we still don't know how much is going to go to the government. So we take our taxable income, our $43,470, and we're going to multiply by our tax rate. So times 0.22. You can use a calculator with this, and you would get $9,563.40. So that amount will go to the government. Everything else will go to the bank. So now when we subtract our $55,670 and take away the amount that goes to the IRS, then we will get what we call our take-home pay. And most people have that go straight to their bank account so that in their name, so it's their money, but it's there for when they're ready to spend it. We call that our take-home pay. If John owes $9,563 in taxes for the year, how does it actually get there? Well, what happens is his company will withhold the money every month. And if he gets paid 12 times a year, once a month, what they'll do is they'll take their $95.63 and they'll divide by 12. So they will take out $796.95 out of his paycheck every month, and then they will send it to the government. Now, this is just an estimate, and sometimes they take out too much or too little. So let's look at refunds and overpayments. So we know that part of John's paycheck will go from his employer to the government every month. So let's say that they took out $10,000 all together last year and went from his paycheck every month to the government. But what if when he figures out his taxes, he only owes $9,563.40 because they couldn't predict it exactly. So what happens is we will find out that he actually should get a refund. And you subtract these two numbers to find out your refund of $436.60. So when you hear somebody say, I'm paying my taxes, that means maybe they needed to pay extra because the company didn't hold enough, or maybe they're saying, I get a refund, and that's when their company withheld too much.